Hello, everybody. Welcome to another edition of This Week in Crypto. I am Brian, the host. I will be joined by Maxim at some point throughout the call, and we're pretty excited to jump into yet another ridiculously bullish week in crypto. Obviously, the prices now sit for Bitcoin at over 41,000, for Ethereum over 1250, and by all means necessary, we are not in cool down period yet. Many people have anticipated there would be a correction, there would be a pullback for about almost a month now, I would say, seriously, especially after it crossed 30,000 about a week ago. So we're in a position now where we're continuing to see many hedge funds, many large companies investing into crypto right now. It is undoubtedly pushing up the price. We'll get into some proof of that and talk about, essentially what is the most historic run, arguably compared to the bull run in 2017 that we may have ever seen in crypto, especially in terms of awareness, in terms of the amount of discussion that is now going on with it, and just it's a time that we really have never seen and don't have a a perfect book on how to react to it. So we'll do our best to unravel as much as we can during this hour. By all means, if you have questions on YouTube, drop them there, and we'll be sure to address.
But yeah, was a short feedback. They asked to increase the volume a little bit.
Increase the volume on my side.
I guess.
Let me see if I can do that. Could it be done on Stream Max? I don't know. Max Balresh, he probably can't talk back to us, but if it's possible, just put something in YouTube, because I don't know if much can be done with my volume. I'll give it a quick check.
Good point. Good point. Yeah.
I'm looking through my mic settings. Mm-hmm. Okay, test 1, 2, 3. Does this sound any better, chat or Balresh? Volume is okay for me, fine for me. Okay, we got 2 out of the last 2 people saying it's good, so that sounds like verification to me. Okay, so long story short, very, very historic month or so, particularly the last week or so. Many people did not anticipate we would be above 40,000 right now, folks. So we're going to be talking plenty about Bitcoin, of course, while giving plenty of attention to altcoins as well, because there's a lot of separation going on. We have projects like Band, Quant, YFI, just a few on my short list that I tend to track on a weekly basis that are really starting to gain steam, while there are plenty of others that are coming up pretty short right now. Monero continues to struggle for a lot of people. As we can see here, Stellar, Link is actually down over the last 24 hours. Theta has retraced a little bit after a good week last week. But on the 7-day, as you can see here, and I'm actually going to make this a little bigger, just a tiny bit more. There we go. So on the 7-day, we still have absolutely monumental gains for a lot of these altcoins. And it doesn't feel this way with all of the discussion really going toward Bitcoin and Ethereum, which are up 41 and 70% respectively over the last week. But I mean, you can see here, like Nano almost 3x'd. We had Status double, we had Verge double. Lots of projects out there coming out of seemingly nowhere that have kind of been forgotten about through most of the end of 2020 and are now emerging as major players in 2021 for volatility trading, swing trading, and even long-term investing, depending on the project. But what's great about our platform, of course, is the fact that we have the metrics to really decipher which of these projects are legitimate and which ones are kind of fool's gold and gaining because of Bitcoin and Ethereum's run and nothing else fundamentally about them. So for starters, like I said, highlighted projects over the past week: Status, Verge, Nano, among others. We have some recent gainers, like I mentioned, Band here. It may be too recent to actually show up as anything significant. There's so many projects, I don't know if it'll show up this way. Yeah, it does. So it's only up 13% on the day, but it's very recent. So this is one to watch, and I may briefly touch on it. And it tends to sort of associate with Chainlink. So we'll see if this rally lasts while Chainlink is down and Band is up. That's not typical. So among many projects, we'll try to get into as many as possible. And in the YouTube chat over here, make sure to drop some projects that you want to know some more information on. Okay, moving on. I'm going to start off by discussing, I'm not going to go full screen. I'm going to go shared access on here. I'm going to minimize it just a little more. That should be fine. So what we're looking at right now are the BitMEX perpetual contract funding rates for Bitcoin, Ethereum, not Ripple, XRP, and Litecoin. And what this is telling us is how much longs are paying shorts or shorts are paying longs at any given point on the platform most noted for being able to both long and short. The reason why we focus on BitMEX is because it tends to get the most, the largest volume of short data and long data, and we can put a pretty good picture together as far as funding rates for their contracts. And generally, sorry for that, guys, my phone just rang and it cuts out my mic whenever that happens. So rule of thumb is when we have high spikes like this, it means that there are significantly more long contracts going on than shorts, and longs are actually paying shorts for every move upward or downward. There are basically less of them. So to equalize that, shorts are getting paid by longs. Vice versa, if you see a big down spike like right here, that would mean that shorts are actually paying longs. Generally, the markets react to what the prices are most recently doing. So of course, we see XRP's big low spikes here that essentially meant there were way more shorts than longs. Therefore, longs were actually getting paid. But more often than not, you'll see longs paying shorts. And very recently, over the last 2 days or so, we've had big spikes for all 4 projects actually, which understandably so is happening because of the fact that all 4 projects are going up more. Now we have a lot more than just these 4 projects, but I don't want to over suffocate the chart here, and you can definitely look at some more projects yourself that are on contracts for BitMEX. We'll start with Bitcoin. Now Bitcoin has had 3 big spikes just in the last 2 days alone. If I highlight over here, you'll see that right now it's at about 0.13%. If you look over in this top left area where I'm highlighting on the cursor, that means that on average, there's a 0.13% payment from longs to shorts, as I understand it. And Max, if you want to correct that or dispute the way I'm understanding it, please feel free. But I do know for a fact that when this metric is above 0.01% for any project, that is generally a bit of an outlier. And right now at 0.13, it means that there are a lot of longs, understandably. So far, those longs have been rewarded because they've seemingly had a lot of these spikes happen. It looks like the biggest one that really happened started on December 17th. And they haven't been wrong. Obviously, on December 17th, we were at 22.8K. So we've almost doubled that price, as crazy as that is to say, in just the last 3 weeks. So we are still seeing plenty of these spikes, and that should be considered a yellow flag. It's not necessarily a red flag, meaning the price is about to correct, but over time, you'll see these contract funding rates drop down to 0, and it takes at least some minor or temporary correction to make that happen. On an even more extreme case, we can look at Ethereum here in purple that I'm highlighting, and if I go to our latest data, we're at 0.27%, which is pretty absurd. We actually got to a spike of 0.61% at one point, which happened right when Ethereum was going through the moon, jumped from somewhere around 500 to 1,000 in just, I think, around a 48-hour span. And that was around the time this happened, if not a few days before that. So, and then, of course, we have XRP down at mostly neutral. There's still a lot of FUD, arguably legitimate FUD. I won't get into my personal opinion or our team's opinion on it because it's not fair and we try not to give investment advice, but XRP is showing about neutral as far as longs and shorts right now. And then finally, Litecoin, which is having a bit of a stutter issue, apparently. Let me see if I can resize. There it goes. So Litecoin is also through the roof right now and is currently sitting at 0.46%. This means for Ethereum and Litecoin especially, there seems to be a ton of longing going on compared to very little amount of shorts. So keep that in mind, and there will eventually be a neutralization of these two that is likely not going to happen until some minor or temporary correction shakes out the quote unquote weak hands, depending on your perspective on those projects. Okay, so I'll move on from that, and I want to jump right into holders distribution. This is a metric that we were just able to add to Sandsheets, by the way, and we have a new model. I don't even think Maxim has seen it yet, but it's pretty exciting. I went over it yesterday on our Sandsheets call. If you guys want to check that out, it's on our YouTube, and I talked about it for roughly 15 minutes. It's pretty darn impressive, to be honest, in terms of what it can predict as far as future prices go. So I'll jump into that in a moment, but first I'll show it just raw here on Sandbase to give you an idea of where things stand. The gold line here is the key because this is the amount of addresses that hold 1,000 or more Bitcoin. You can see here, if we go back to July 6 months ago, we were at about 2173 of these addresses. As it stands now, you can see this gold line just over the last 2 weeks has absolutely skyrocketed and is now at 2385. So we have about, give or take, 212 more of these addresses than we did 6 months ago. That's about a 10% gain. That's a lot when you're talking about Bitcoin whales. I would argue that around 2,000, the top 2,000 Bitcoin addresses should be considered whales, considering the vast amount of total addresses for the #1 market cap asset. So this is a giant increase of 10% over just a 6-month span. It's really telling, and obviously we've discussed that crypto is a whale's playground and they are going to call the shots. So when they're simultaneously buying in and there are more and more huge addresses being created, it's one of the best telltale signs, in my opinion, and probably everyone on our staff's opinion, in terms of what is going to project where markets move next. And right now, there's no slowing down. We had this temporary drop here, and not surprisingly, Bitcoin was sort of tapering out around the second to last week of December. But as soon as this turnaround happened, just look at how Bitcoin absolutely soared. It was at 24,000 at the end of the second to last week of December, and then just has absolutely exploded as these whale addresses have exploded. On the contrary, look at this red line. This is addresses with 10 to 1,000 Bitcoin in their wallets. So this is the second highest tier, and it has peaked about, we called out about a month and a half ago at 153.8K addresses. Now it's at 150.96K. So give or take, we'll call that 2.8 to 2,800 less addresses containing 10 to 1,000 Bitcoin. So clearly this tier has taken tons and tons of profit as the prices have been rising. They thought, if you talk about this group as one unit, where of course they're not, and these are all individuals deciding this, but they thought that around November 25th, when we were at about 17,000, this would be around the top and a good time to take profit and buy back later. Turns out they were a little bit wrong, right? And since that time that they peaked, the price has more or less jumped, what would I call that, 150% or so. So absolutely crazy. And as prices have rise, we're just continuing to see these big, severe um, drops in numbers of these mid-tier, or even I'd call them large tier addresses, because 10 to 1,000 Bitcoin is no joke. Even 10 Bitcoin, if I'm doing my math right, is sitting at 420,000 or so right now, 410,000 dollars USD. So that's a pretty significant sized address, and they are dropping in numbers quickly as the top tier whales, those who are millionaires or tens of millionaires or hundreds of millionaires or even billionaires, those are the ones that just continue to rise here. So I think it's a really, really telling statistic. And I'll show the Sandsheets model here in a second. But before I do, I'm really quickly going to show Ethereum on Sandbase as well. And it's basically the exact same story. We have the gold line here representing, in this case, 10,000 or more Ethereum. So give or take, doing the math, 10,000 times 1250 would be, I'm not gonna, I may get this wrong. I'm thinking it's 1.25 million. It might be 12.5, one or the other. Either way, these are millionaire whale holders. I think it's 12.5 million. They're millionaire whale holders that are continuing to grow in numbers, basically. And it's not just because the price is going up, it's because as the price is going up, these holders that were in the red tier have decided to get and accumulate more Ethereum to join the 10,000 or more club so that they can profit even harder. And they've been very, very successful, as we can see. We just saw a bit of a drop yesterday with our latest data, but this is not really much of a blip. It's more or less a break-even day when we went from 1205 to 1203 in terms of these holders. So once again, if you compare the gold line to the red line, which is 100 to 10,000 Ethereum holders, that would be 125,000 all the way up to 12.5 million. So that's the red line. That means that everyone in gold is $12.5 million or above. So that mid tier has absolutely plummeted, and we're down to 51,189 after being at a peak of 53,203 just about a month and a half ago. So very interesting stuff there. And I'm going to show off the holders model now. I'm going to start with this one, which is going to look like a whole lot of lines, but trust me when I tell you these are very valuable lines, because they're basically highlighting what I just showed over here with this gold line. All of these lines on the model are the assets respective gold line. Essentially, they're whales, or the closest thing that I could get to what would be considered a whale. And you can see in the legend here, it'll actually tell you how many we'd call whales based on what we could do with holders distribution. I'm limited to going off of like, 1,000 or more Bitcoin. And if I went to 10,000 or more, there would only be like a tenth of these, or even less than a tenth of these. So I figured that that would be a good rule of thumb for Bitcoin. And I basically went right down the line and went with that exponent of 10 and the closest thing to it that could be not quite like 6 whales, but like the next degree down in terms of the 10th exponent below that, for you mathematicians out there wondering why these numbers vary so much. And especially if it's a smaller project, like you'll see Compound, there's only 75. That's because there's such a smaller fraction of Compound holders compared to Bitcoin holders. I still think that theoretically we want to keep it around like the top 0.1 or even 0.001% of the holders qualifying as whales. And I might even want to go even less than that, like 0.0001%. But I digress. The point is, we're looking at the gold line, or the whales, and amount of them over time. We're looking at the past 3 months here, and these lines are basically comparing versus the average mean over those 3 months. So anything over 0, this black line right here of the axis, that means there are more whale addresses now than there have been on average over the past 3 months. That's significant. And so far, since making it yesterday, we're already seeing a lot of things come true for it. So this banned protocol one, for example, there are 22% more 10,000 or more holder addresses than there were on average over the last 3 months. As we showed on the screener, it's just starting to come alive right now. I can't say it's going to continue, of course, but just over the last few hours, we're starting to see a lot of movement upward for band. We also have AAVE up here at just about 35% above the mean. That's really significant. Keep is up there too. And then we have YFI, interestingly, at 16% higher, especially over the last, it looks like 5 days or so. There have been a lot more YFI whale addresses being created. And that would be, there's currently 196 of them. And I believe for them, it's 1 million or more. That might actually be wrong. That sounds super high. So I might have to fix that one. I'll go back, but it might be like 1,000 or more because I know YFI's price is, the largest next to Bitcoin. We also have Bitcoin here sitting at 5.7% above the mean. So that's factoring in everything that we just looked at over on the holders distribution chart on Sandbase. Chainlink at 5%. A lot of these projects are over the average right now. It's not just Bitcoin. Ethereum is in here somewhere in red, and it's just a little above. We also have, on the flip side, much less whale addresses compared to the last 3 months for Bancor, for OMG, for XRP, for Raiden, and a few other projects to keep an eye on. Now, you guys can use this model. All you have to do is have a Sandbase Pro account. I went over yesterday exactly how to plug in your API key, basically download the model, which we'll have available on the website soon. And you'll make sure to go to add-ons, add in your Sandsheets API. Once it's plugged in, you'll see everything auto-compile over here in the data section where we keep all of the actual data coming in, which is linked to the charts. So that's the holders change chart. And now I'll show off the today versus 90-day price chart. And this sort of gives a quicker, easier snapshot in my mind than this, where you can kind of find outliers. Here, you can get just an objective snapshot look at what the 90-day price change is in blue and what the holders percent change versus that 90-day mean is. So essentially, you want to find projects that have a large holders change versus 90-day mean, but a low price change. And obviously, Keep is looking like the best on this model. However, Keep is also a very, very small cap coin, and there's going to be a lot of variability and volatility to it. So I tell you to proceed with caution if you're seeing this right now as kind of the big gold mine on this chart. But there are plenty of others in terms of opportunity. Like I said, band here, 22% above the mean, but it's up 60% in the last 90 days. So keep that in mind. You're already buying on an asset that has gone up 20% per month over the last 3 months. We can see Bitcoin here as the absolute king. It's up 265% over the last 90 days and up a modest 5.7%. You get the idea. I think this is really cool. You can also sort it. So right now it's alphabetically, but if you go to the sorted tab right here and you want to just look at 90-day percent price change, you can go back here, and now it's sorted by projects that have returned the most in the last 3 months, descending downward. You can also do the same here for holders change versus mean. Go back, and now you have all of the highest red bars here going descending. So right around here, it looks like right here is the break-even point where these projects and below actually have less new whale addresses than normal over the last 3 months, and these have more. So I think this is really cool. I think it's going to be a very solid predictive model for the future, and you guys can get access and update it to your heart's content. Data updates once per day. Don't expect it to update every 5 minutes like some of the other metrics like volume or daily or hourly active addresses, stuff like that. This is a once per day metric, so it's a good thing to check in on a daily basis with your API key on Sandbase Pro. Okay. Before I go on, I know we're 25 minutes after, and I want to make sure that Maxim gets the floor for a bit. If he wants to go over anything, I'm happy to screen share. Or if you want, Max, I can continue to just go off of things that I'm seeing in the markets.
Thanks for offering. Generally, I have two things, as I'm also now quite active in the market. One is a long-term, what could we use to pinpoint Bitcoin, Ethereum top? Because we have to do it. Yeah, if we cannot do it more or less properly, we're in danger to lose 50%, which is typically, yeah. Tops of this magnitude, it means 50% will be removed from your wealth pretty fast. So it's one thing, and I have some ideas on which metrics to keep eye on from our Santiment tool, and I can explain also, go into background why. So it's one thing, and the second, of course, alts is also very interesting. I myself, actually, I'm mostly focused on DeFi stuff, like at the moment Keeper, and then maybe Uniswap, and maybe REN BTC. So there are interesting pattern emerging there too. Like really, not yet final flip. I think we need one more explosive tops and deep correction and can go full in. So these two topics. Now I don't know what Brian's your plan. What is your planning for the rest of the evening? So I think I will have to pick up one of them, because if I talk on any of them, it will take at least 10 to 15 minutes. So
yeah, definitely bring up. Definitely go bring up whatever you feel, and I can talk about social volume, social sentiment, and anything really. So take the floor, and I'll adjust around whatever you decide not to talk about.
Yeah. Let's mention today Bitcoin, and we can come back to it also next week.
Definitely. Yeah. Would you like to share your screen, or you want to go off mine?
Yes. Okay. No, I will share my screen. And let me just set it up a little bit. And let me set it up a little bit. So now, and I will be like doing ad hoc. You will see how I myself using our platform. Okay, my screen is visible.
Yep, looks good.
Good. So I will then let's talk only about Bitcoin. And for those who have an account, Santiment platform for others. This is how it looks when you have pro account. Something is changing here, and your own chart layout on the right side, and watch lists of observing and projects you've seen. Okay, actually, after latest updates, became really comfortable to work with. And so for Bitcoin, just to know people that when you buy Nexus, you also not just data and metrics. Also, there is quite a big team of data visualization engineers try to make your life nice. I will keep this one for the moment. I will remove this, even though I think you will. It is important. I will remove this. This is also important, but just for simplification, I even remove this. Can you imagine? Edge consumed, my favorite edge consumed. Realize profits. Okay, I will keep it. I will remove this. The electric addresses too. Now, I will keep this. And I will add MVRV on-chain network value. MVRV better time bound, let's say 1 year MVRV. Okay, so I will place on top of it price of Bitcoin. Good. And generally, there are two main metrics, mean age or mean dollar invested age and MVRV, which I'll be using for potentially spots on the top. And then there will be some subtle metric, which I think no one in the market still has it. And it will be net correlated profit loss. I also will show how possible to use it. So let's start with mean dollar invested age. And for this, it's better we take history back to 16 and up to now, because you will need to see a few things. Or even, let's take the previous top, back to 14 or even 13, yeah. So all time. Now, increase. So what you see on the screen, of course, as always, green is the price of Bitcoin, and then there are two wildly oscillating charts. One's mean coin age, darker color, and mean dollar invested age is pink color. Sounds complicated, but what it really does, it tracks changes between two conditions: accumulation by network participants and distribution. Distribution to who? To newcomers. Yeah, those who accumulated in the previous cycle lower prices, or even were buying in the previous all-time high, but mostly buying at lower prices. Yeah, because whenever you or anyone panic and sell it at 5,000 or 6,000, there's someone's buying it. So people who've been accumulating low, they are redistributing each single cycle. There are no exceptions, and there will be no exceptions this time. If even we read everywhere, oh no, this long-term institutions, those who bought cheap, they will sell it, and they're doing it now. So you will see the pink line here. Redistribution process started at around of 12 or 13,000, and it's in a full swing. The moment we're somewhere at this level, okay, let me put, because we have now very nice tool, we can draw lines. I think the moment we're somewhere here, because it's a kind of sloping line. There are some coins which are lost and cannot be redistributed if you want to. So you will see that this line is getting kind of a little bit higher in each circle. So I would say, okay, to be secure, somewhere here, we will see when this pink line hits this gray growing trend. It's high time to leave Bitcoin if you haven't done so far. But basically, even now, it's already quite good price, but we can accelerate to the top. Bitcoin has a good history of doing it. Just know that based on all the previous data, we are in the middle, from time, if taken from time, approximately middle of redistribution process. And you decide if you had bought before, maybe you will be exiting. If you're entering, just know that you are buying at price, and we might see this price again in the future. So this is one metric, mean dollar invested age, yeah? Or accumulation redistribution. Second one, MVRV. So it's a very important one. Historically, well, MVRV is like a value of all relationship between what people paid to get all the Bitcoins and what is the current value of or market cap of the whole Bitcoin. So, and there was a very extremely high 240% as an average. All participants of the Bitcoin network, how much they in profit. 240% was in the first top of 1,000. Last time at 17, we were on 155%. So I would guess that this time, it's a downward slope because of many reasons. Coins are also lost, but it's also that people, they know that everything moves in cycle, and they learn each time, okay, and last time I did not live at the top, so I have to live now. Some live too early, but still, smart people, they know you will have to live at some point. And we can also try to put some trend line here, trying to see where we are now. And actually, according to this chart, we're already in endangered territory. Yeah. So, but it's anyway, it's very speculative because the first one in 2000, I don't know. But let's say if even we stay more or less the same insanity level in 2017, so then we'll get approximated level how you see 155% of average. We are 115. Yeah, there is some few left, but not too much. Not too much. And if you are pro subscriber, I can just make a separate chat layout and share it as it is, so you can come and check every day if you hit the danger zones. Okay, that will be like to average profit of the network participants who are holding Bitcoin, and are we in accumulation distribution process. And the last chart, which is also here, network realized profit and loss. So whenever Bitcoin is moved, we know its age, we know the price when it was bought, and we know the current price. So we calculate all Bitcoins moved on these days. Are they moving in profits, or are they panic and moving in loss? And even though we have this metric for all coins on our platform for more than 1,000, for Bitcoin it works one of the best because Bitcoin has no other meaning, just stores the value. So whenever someone moves Bitcoin, it means either he sells or he buys, or he moves it from cold storage to hot to exchange to sell, another way around. On Ethereum, for instance, more complicated. This metric has to be refined, but for Bitcoin, it's a perfect one. And you know that, well, I know from my experience, there is specific patterns how people behave at tops. And I will take 2017 year to show the point. It's a normal behavior, and it should be like this, that whenever price keep increasing, people take profits. Yeah, it's a good correct behavior. The moment people stop doing it, it's a danger zone, because rationality, actually irrationality, but rationality in a sense to explain it, they became so convinced and not concerned or waiting for the next 2x, they say, okay, I will wait a bit more. And you see, this is exactly what happened in 2017. When we made last open December 17, the amount of tokens moving profit was much less, like 50% of what they did in the previous two tops. So when Bitcoin was making 70,000 or breaking 70,000 and then coming to the peak again, this is where people say again, yeah, I need to make profits. But once it moved to 90,000 or touch actually 20,000, yeah, they did not move so much. So okay, maybe I move, or maybe I wait a bit more, maybe Bitcoin will get to 50,000. So this is a rationality behind why it's so important. Now, let's see where we're now. Yeah. So for the moment, it's a kind of still okay, because this big spike, it was when, what was it? I think old stolen Bitcoins or from Silk Road moved. So it kind of distorts the chart. But then we see that this is the first place when a lot of network participants took profits when it was reasonable, $27,000. And once we moved recently again to 40,000, or again, big chunk of people took profits. So it looks like kind of okay. I would not say that they behave too overconfident, but if we again, just keep watching it, if we are on this level, so even go, I don't know, 42, 43, 45,000, and suddenly see strong drop, people stop moving. Coins which were bought very cheap, or which could generate them a lot of revenue or profit, then it's also not a good sign. And honestly, actually, we thought we were there, because at this time, like on the 7th of January, it was indeed we're breaking tops, but people moved too little, like at this point here. Yeah, you see that they were starting to move less and less, but we were thinking, oh, okay, bearish sign, but maybe because of vacation. Yeah, sometimes people also need to do vacations. They just waited. So now everyone is back from vacations. Everyone is sitting in front of computers. So there are no excuses. If we see the similar pattern, that's it. And I would say maybe a limit to this. Brian, you continue with what you want. And we can just revisit the same chart layouts next week, because they are more like long-term, this metrics. Yeah? And if you see prices going down, we can check back, okay, under which condition, in which environment we experience this correction. And if the data shows okay, that's it. The background environment was very topish, then we can say, okay, so it's a real long-term top. And if we see now still okay, then we can be more bullish. I will make a chart layout and we can revisit next week. And I can share in our stream now. When you're talking, I can make it. Just make sure that I think you need a Sunbase Pro account, otherwise you will see only part of data or very limited.
Yeah, thanks, Max. This certainly is awesome, and I'd love to see more of it. So long story short, you're seeing some signs of some danger zones, but there may be one more leg up before the hammer comes down based on these metrics.
Yeah. Based on this accumulation turn into redistribution, yeah, we still can go for a few weeks. It's okay. It doesn't have to be, but you saw on the chart. We went lower in the past, so we can make the lower ones. I mean, we can deeper in the territory of full redistribution. And I mean,
yeah.
If I don't know if you read or not, there are some analysis. Actually, we never post on our site that old packages of 1,000 bitcoins, very clean from mining, have been moving here and there. Yeah, for the current market, it's not so much, but it just shows that once this process is over, yeah, everyone who wanted to bought, who wanted to sell, and then when no one wants to sell anymore, some will say, okay, then there is no supply, but it means that if no one wants to sell, it means there's so sure in the future, and that's exactly when reality say, when you're so sure about the future, it turns to something you don't expect.
Mm-hmm. Yep. Well said.
Yep. Okay, I will. Then you can take over, and I will prepare kind of chart template for this three.
Sounds great. Thanks, Max.
Yeah.
All right, so I'm going to share mine again. All right, so Max mentioned danger zones, and this is something that I love focusing on too, because we can look back on history and find when the most consistent times have shown there to be some sort of danger zone according to our on-chain metrics for when things typically correct or when at least a temporary local top tends to occur. And right now, we're looking at a chart that's basically across the board showing that everything is slightly more risky than usual. Now, this shouldn't be surprising when we look at, our screener here, we look at the last 7 days and prices look like this, right? Just huge returns across the board. We're going to see that on average, most traders are going to be in profit. Now, this doesn't just mean that, if Bitcoin is up 10%, trader returns are 10%. There's FOMO, FUD, all sorts of decisions that traders make on average that either makes them a little bit more than where the price returns are or a little bit less than where the price returns are. So right now, we're basically seeing that all of these MVRVs, if we look on this chart, I'll look at Bitcoin right here. The 1-day MVRV, average traders are up a little over 5.5%, 7-day 18.2%, 30 46.1%, 90 73.5%, 6-month almost double 93.7%, and 1 year 123.5%. So across the board, Bitcoin traders on average in a game that's supposed to be a zero-sum game is showing that it, they're up across the board regardless of time frame. So going back here, what this does is factor in just how much risk is associated when traders are up a lot or down a lot. Right now, like I said, they're up a lot across the board, which is why you have this huge red bar. Anything below this dashed red line means it's in the top 10% historical occurrence for risk, meaning there's a severe amount of risk, and this typically is a time when there is a local top or correction. Like Maxim just said, there isn't necessarily any sign that it's about to turn around immediately, so it could easily make a run at 45,000 or 50,000 before a correction. We don't like to predict exact prices that things are going to correct in the future. What these types of charts do is they simply focus on how much risk there is compared to historical times. And right now, we're clearly seeing that there's a ton. You can see Maker here is even off the board. Ethereum, right around where Bitcoin is, where there's just universal returns. By the way, Maxim, if you're hearing this, if you wouldn't mind muting your mic, you're still on. If someone can contact me. Oh, it's okay.
Yeah, okay, sorry.
I was hearing progressively more sounds. I just wanted to let you know. So yeah, long story short, a lot of red right now. Anything below this dashed red line means it's in a top 10% risk compared to historical average over the course of those respective assets timeframes as they've been publicly traded. You can see there's a few neutral or semi-neutral ones. Raiden here may be one of the better bets because there aren't significant returns completely. You know, status, even XRP, a little more on the neutral end, but basically all of these projects are going to be greater than average risk right now if you start a long investment in them right now. So really interesting there. I will also go over social sentiment. So we've gone over these charts pretty consistently on our This Week in Crypto calls, and there's a reason for it. We believe that sentiment really does have a massive pull and say on where markets are going to be heading next. And as Maxim explained, when crowds universally expect one thing, the other occurrence tends to occur. So if the crowd universally expects for prices to go up, they tend to go down. If they universally expect for prices to correct, they don't. And essentially, what we saw here is that as of December 30th, the crowd was about as euphoric as it's ever been outside of very briefly here in early May 2019. And when it got that euphoric, we actually had a very brief local top. It got up to right around 33 to 35 before dropping down to 28 for that next day. And when it did, we see that the sentiment here in orange was dropping very rapidly as people said, okay, this was the local top. It's time to sell off. And once the crowd decided that, the price decided to do its own thing. And as we saw with the holders distribution charts, that's when a lot of whales started to really go for the gusto and accumulate fast. And we saw huge growth in 1,000 plus Bitcoin addresses. And then the price just absolutely skyrocketed the last couple days. So what we're looking at is basically a snapshot of all of the positive versus negative commentary and multiply that by the overall volume related to Bitcoin on social platforms. This one, of course, is just Twitter. So looking at using our algorithm, we can decipher how many positive versus negative comments there are and just how much volume there is in terms of commentary to get this algorithm. And we are still well into the positive range. Being just above 1 over the standard deviation means there's a significant amount of volume going on in terms of discussion, which would be expected as we continue to hit all-time highs for pretty much every day over the past week. And most of those comments tend to be positive, like, you know, anything that says, I can't believe how much money I'm making, or my long investment just tripled. these are all positive comments that are going to contribute to this chart being as high as it is right now. So we only have Bitcoin on this, but we'll soon get other assets back up and running. We had a little bit of a bug in this platform over the past few weeks that's caused only Bitcoin to work. But arguably, we still have the most important chart up on here. So by all means, head to graphs.santiment.net/social with your Sandbase Pro account, and you can check in on this anytime, not just for Twitter, but any of these other platforms here. Okay, before I address questions for a few minutes, I'll just go over one final model here, and that is our NVT chart. This is measuring the amount of token circulation that is happening on a day-to-day basis, shown in monthly form here. It's actually doing a refresh, unfortunately, but that's fine. You can see very clearly here, we are in a bullish month right now for the first 8 days of January, after being semi-bullish for October, November, December. You can see prices absolutely soared as soon as it started to turn yellow-green here. So again, this model's done its job as a great long-term indicator to be able to sort of predict where prices are going to go. And if nothing else, it'll justify that a price surge of this caliber is legitimate because of the amount of unique tokens that are moving from wallet to wallet on a daily basis right now. Even as the market cap is moving up, token circulation has actually been increasing even more mathematically than the market cap is, according to this model. So NVT is looking great. We'll see if it refreshes here in the next 10 seconds and I can show Ethereum. Otherwise, I'll just move on to some questions. And I already saw something for both DOT and Cardano, so we can talk about those. And if there are any others, if anyone wants to jump on the mic and just let me know, I'll try to address those too. I see, okay, this is just Maxim. But yeah, I saw DOT and Cardano. So, okay, it did refresh. So I'll show Ethereum really quickly here before moving on. Ethereum is actually looking really, really good. It's on its 9th straight month of bullishness, and the price has acted accordingly. The price is basically, other than an occasional drop off in I think that was September, yeah, it's gone up every month during this 9-month stretch of bullishness. And the 1 month that did go down was due to a Bitcoin correction. So Ethereum's NVT is looking better and better here. As long as this bar is under these 4 trend lines, it's going to continue to show up as green on a month-to-month basis. So we'll watch closely here as we go throughout January, get more days to fill in that sample size, and see if it maintains this status right here. Okay, so I'm going to jump into Polkadot here a little bit, go over a few metrics. I'll also talk about Cardano, and then we'll probably close it off if there aren't any other project requests you guys want to see. So we're looking at Polkadot right now. We have a few different charts, a few different metrics going on. The blue line here is social volume. So rule of thumb for social volume is if price is rising and social volume spikes with it, that means a local top is imminent. If price is going down and social volume is going up, that tends to mean a local bottom is forming. And right now, we are basically coming off of one of the largest stretches of social volume that we've had in DOT's history, other than back in August when it first got its initial start and run up to about $5 here, a little, yeah, almost $6. So when it did make its run, it actually had a decent amount of social volume that was already starting to explode on the initial burst from 532 all the way up to about 659-ish. This initial spike really told the story, and when it did drop down, it wasn't a big drop off to these former levels. And because it stayed up this high, there was sustainability to the rally, right? And it basically has stayed here for the last, we'll call this week and a half, before going back down to these normal levels, like it may finally be doing as of today. But that isn't necessarily a bad thing. if social volume is actually dropping as the price does, as we've seen over the last day or so, we've gone from 1010 down to 939. So a little, maybe an 8 to 9% drop. Um, Social volume has plummeted, and that's actually a good thing, um, because it means that it potentially is starting to be overlooked and ignored again. And if it's overlooked and ignored, that's when whales and people with a lot at stake can really capitalize and buy at good prices with the expectation it's going to go up because of their volume. So interesting there. As far as transaction volume, that's shown here in white. And as you may expect, transaction volume hit its all-time high just as the price was. We got up to 1003, right at over $10. Volume absolutely exploded as it became very polarized, and some people were buying, other people were taking profit. It looked like there were probably more people taking profit due to the slight drop. It actually rallied here as volume dropped. Um, the rule of thumb with volume is when a price is moving in one direction, if volume is rising along with that direction, whether it's up or down, that direction will continue. If the volume drops as a direction is moving, a reversal will happen. So as price was dropping right here, volume dropped significantly to show that there wasn't interest in that move. Therefore, it ended up reversing and then making one more run at an all-time high. Got a little over 1010, I think. It's just showing here because it's the data is a bit granular, but it actually made a slightly higher local top before dropping back down again. So we're in an interesting spot for DOT. It could very well make a new all-time high and make another push, especially because there was a higher high made right here. This is my technical analysis speaking. But as far as fundamentals go, social volume dropping is an interesting sign. It would be great if it actually sustained these levels, but we'll want to see if it does drop back to its normal levels like it looks like it is right now. We'll want to see another spike to really indicate whether the crowd is excited about the opportunity occurring here, if it drops more, or about a potential third run at an all-time high coming up. And lastly, development activity. This is essentially showing the amount of GitHub submissions happening on a daily basis for Dot through their coders. And as a lot of projects looked right here, there was a big drop off around the holidays. This is completely normal. It happens every year for almost every project. And as soon as the holidays ended, it's basically picked up right where it left off. It's getting 118, 119 submissions per day. It peaked right here where it got up to about 150 submissions per day, which is very impressive. And this is a much higher mark than average for most crypto assets. So as far as a long-term hold, this looks like a better than average opportunity based on increasing long-term volume. Social volume I'd call more of a wash, but development activity being as high as it is right from the start, even before it became publicly traded, that's a very good sign and a good long-term visible bullish indicator, in my opinion. As far as Cardano, we have some interesting things going on. We obviously had some huge social spikes here back in July, and I'm not sure what they were attributed to, but these can more or less be deemed as outliers because I think it's a little hard to see here, but I think that price just had made a big jump from 11 cents to about 13.5 cents, and there was a lot of interest in it while the rest of the markets were a little more neutral. But social volume, we actually had our biggest spike since then, so a 6-month high spike just 2 days ago when prices actually hit 30 cents for the first time and got up to about 33 before correcting downwards just slightly. So this is completely normal. For those of you who haven't read our insights, we came up with a pretty great study where we found that anytime social volume spikes to the point where an asset is on our emerging trends page, which is a top 10 rising trend look at what assets or topics are getting the most discussion compared to their normal averages. Anytime it hits the top 3, which I believe Cardano did a couple days ago, there tends to be a 9% correction over that next week and a half to 12 days or so. That may not necessarily happen for Cardano, but given historical odds, this may be a bit scary right now because we had a huge social volume spike followed by a correction and then kind of declining interest right away for the asset. Now it's still up a little, and if social volume stays up here, we could just see exactly what we saw with DOT, where there's a second push at an all-time high. I don't know if this was an all-time high or not. I won't zoom out right now due to time constraints, but at least on a 6-month span or a year span, this is the highest we've been. So we'll want to see if social volume stays up here. And it's also worth noting that trading volume has absolutely exploded. Let me get rid of social volume here just to zoom in on trading volume a little more. Ignore this. This spike here happens from time to time due to the data that we pull in from coin metrics, but this can basically be considered a normal bar down here. So ignore that, even though it's sort of skewing the axis. I'll actually just zoom in right here to try to get rid of it. You can just highlight by holding down the mouse cursor, guys, super easy. But yeah, social volume has, or I'm sorry, trading volume has absolutely exploded just over the last, I'd call it a week or so, as the price has risen. So that's telling us, just as we learned with DOT, that when volume is rising as a price direction is happening, that means that that rally can continue. And it happened right up until right after the top. And as soon as that correction occurred, volume dropped off. But notice that it's still very, very high, and it's at basically the highest levels. Let's look at the last year. Oh yeah, it's by far at the highest levels it's ever been in the course of Cardano's 3+ year history. So that's a pretty big deal. And we're essentially going to be watching closely to see if volume can stay up here as it sort of ranges in this 30 cent area, or if it starts to plummet. If the price drops and volume plummets, that could be a sign of a local bottom and a good opportunity. If volume rises again as the price is plummeting, that's a bad sign and is basically telling us that the crowd is increasing interest as a price drops, meaning the drop can continue, just as interest rose as price rose. So it works both ways with volume. And now finally with development activity, Cardano is actually one of the leaders. I think it is the leader on most monthly looks at top asset development activity. Per day, if I change this to, instead of 1 hour, we'll go 1 day. So per day, it was getting about 450 GitHub submissions a day. That's massive. There's no asset that has more than that. It's dropped just slightly over the last couple weeks to 425. But if we zoom out, we'll look at like the last 6 months. We get rid of volume. We zoom out, it looks like we were at better rates here back in November, and it's dropping kind of significantly right now, which is interesting. So I'm not quite sure what to make of this. We are starting to rally a little bit again. Let me go to all time here, because if we see a good long-term trend, we're still fine, and that's exactly what we're seeing. If I highlight since here, we'll just go to mid 2016. We're in a clear long-term upward trajectory. So I don't think that this is anything more than just a small outlier, just as we saw back in mid 2019 and late 2018. Development activity just continues to grow for Cardano. As far as non-ERC20s go, this is basically the standard as far as development activity. It's what we want to see all other projects look like. So very good sign for long-term Cardano holders, knowing that their coders are consistently adding on more and more to the innovation of this project. So very interesting to check that out, and I appreciate the person who asked a question for us to look into Cardano. That being said, guys, we're about 5 after. We're trying to keep these calls to about an hour now. So by all means, drop us more questions in the Discord. Hit us up on Twitter. Anywhere else you can find me and Maxim and many of our other staff members in the general channel in Discord. So please feel free to drop us a DM if you have questions about any of the models or the charts or just general metrics that we looked at here today. And for now, signing off, and we wish you all a great weekend, and we'll talk to you all next week.
Yeah, thank you, everyone.
Thanks, Max, for joining. Thanks, everybody.